Is the real estate market heading for a bubble burst in 2024? A chilling question, isn't it? Imagine the ripple effects it could have on our economy, our livelihood, our future. The phrase bubble burst sets off alarms, doesn't it? It's a provocative, urgent question that needs to be addressed. It's not just about bricks and mortar, it's about our lives, our dreams. So, are we on the precipice of a real estate downfall, or is it just fear-mongering? Stay with us as we delve into this intriguing question. To understand the future, we first need to understand the present. And the present paints an intriguing picture of the real estate market. Today, we're seeing a market that's bustling with activity. Home buyers are navigating through listings with a sense of urgency, while sellers are enjoying the benefits of a market that's largely tilted in their favor. In many regions, property prices have been on a steady upward trajectory over the past few years. This increase is driven by a complex combination of factors, including low interest rates, a shortage of housing supply, and a surge in demand fueled by changing lifestyle trends and the impact of the pandemic. In many urban areas, the demand for properties has skyrocketed as remote work has become the norm, leading many to seek larger living spaces. Suburban and rural areas have also seen a spike in demand as people move away from densely populated cities, seeking more space and a better quality of life. This shift in demand has led to a remarkable increase in sales rates. Properties are being snapped up almost as quickly as they're listed, often at prices well above the asking. This has created a seller's market, where competition among buyers is fierce and bidding wars are common. But it's important to note that this is not a uniform trend. While some areas are experiencing soaring property prices and sales rates, others are seeing a more modest growth or even a decline. This disparity underscores the complex and localized nature of the real estate market. While the current market conditions may seem favorable for sellers and perhaps a bit daunting for buyers, it's vital to remember that real estate is a cyclical market. Periods of rapid growth are often followed by periods of slower growth or even contraction. So what does this mean for the future of the real estate market? Will the current boom continue, or are we heading towards a bubble that's bound to burst? These are questions that many are grappling with as we look towards the horizon. With this understanding of the present market, we can now delve into the possibilities of the future. History often repeats itself. So let's take a look back at previous real estate bubbles. One of the most notorious real estate bubbles in recent history occurred in the United States in the mid-2000s. High-risk lending and borrowing practices led to a rapid increase in housing prices, creating an unsustainable bubble. When it burst in 2007, it triggered the Great Recession. The economy took a hard hit as millions lost their homes, and it took years for the market to recover. Across the pond in Japan, the late 80s saw a massive asset price bubble. This was fueled by overconfidence in the economy and lax lending practices. When the bubble burst, it led to what is now known as Japan's lost decade, a period of economic stagnation that lasted well into the 2000s. And then there was Spain, which experienced its own real estate bubble in the early 2000s. This was driven by a surge in demand for property, speculative investment, and easy access to credit. The bubble burst in 2008, leading to a severe economic crisis that Spain is still recovering from. Each of these bubbles was unique, yet they all shared common factors. They were all fueled by a combination of easy credit, speculative investment, and overconfidence in the market. And when they burst, they all led to severe economic downturns. But here's the thing, after each crash, the market eventually recovered. In the US, it took about 6 years for housing prices to return to their pre-crash levels. In Japan, it took closer to 20, while Spain is still on the mend. The point is, real estate markets have an inherent resilience. They can and do bounce back. So, what can we learn from these historical bubbles? Well, they serve as stark reminders of the potential risks and consequences of speculative investing and over-reliance on credit. They also underscore the importance of maintaining a balanced and diversified investment portfolio. These historical events provide valuable lessons for predicting potential future market behavior. So, what are the indicators that could signal an impending real estate bubble? Well, here are some key signs to look out for. The first and most visible indicator is rapidly rising property prices. When prices escalate at an uncharacteristically high rate, it's often a sign that the market is heating up too quickly. Now, it's important to remember that high property prices alone don't necessarily indicate a bubble. The key factor to watch is the rate of growth. If property prices are skyrocketing faster than incomes, then we have a mismatch between what people can afford and what they're being asked to pay. This mismatch is a classic sign of a bubble. The second indicator is excessive borrowing. When credit is easy to come by and lending standards are lax, it can lead to a flood of buyers entering the market. These buyers, fueled by cheap credit, can drive prices up. And, when those interest rates inevitably rise, those same buyers might find themselves unable to keep up with their mortgage payments. This can lead to a flood of properties hitting the market, causing prices to plummet. The third indicator is speculation. When people start buying properties not for the purpose of living in them, but with the intention of selling them on for a quick profit, it can be a sign that a bubble is forming. Speculation can drive prices up rapidly, but it's like a game of musical chairs. When the music stops, someone is left standing. And finally, if you see a construction boom, that's another red flag. If developers are rushing to build new properties in response to high demand, it could indicate that the market is overheated. When supply eventually outpaces demand, prices can drop dramatically. Understanding these indicators, rapidly rising property prices, excessive borrowing, speculation, and a construction boom, will help us assess the possibility of a bubble burst in 2024. So, keep your eyes peeled and stay informed. The more you know, the better decisions you can make when it comes to navigating the real estate market. Now, let's use these indicators to analyze the risk for 2024. The real estate market is a complex beast, constantly changing and influenced by a myriad of factors. But with the indicators we've discussed, we can start to make some educated predictions about what might happen in the year 2024. Firstly, let's consider the current market trends. Over the past few years, we've seen a steady increase in property prices, with demand outstripping supply in many areas. This has been fueled, in part, by low interest rates making borrowing money more attractive. However, with the Federal Reserve hinting at potential rate hikes in the near future, this could dampen some of the enthusiasm in the market. Secondly, the housing affordability ratio, which compares the median household income to the median home price, is reaching new highs. This means that homes are becoming less affordable for the average person, which could potentially lead to a slowdown in the market. Thirdly, the level of speculative buying is also a concern. Speculative buying is when investors buy properties with the intention of selling them for a profit in the future, rather than using them as a home or rental property. This can inflate prices and create a bubble-like environment. As of now, speculative buying is on the rise, which could be a red flag. Fourthly, the rate of new construction is another key indicator to keep an eye on. If construction rates start to slow down, this could indicate that developers are becoming cautious about the future of the market. In conclusion, while there are signs that point towards a potential bubble in the real estate market for 2024, it's important to remember that these are just indicators, not guarantees. The market is influenced by a multitude of factors, many of which are unpredictable. While these are educated predictions, remember the future is never set in stone. So, is the real estate market heading for a bubble burst in 2024? That's the million-dollar question, isn't it? Let's briefly revisit what we've unpacked today. We've taken a hard look at the current real estate market, examining the soaring prices, influx of investors, and the increasing demand for property. We've also delved into the history, unearthing lessons from previous real estate bubbles that have left indelible marks on the economy. The signs of a real estate bubble have been laid out: rapid increases in property values, frenzied buying behavior, and an oversupply of properties. But remember, while these are indicators, they are not infallible predictions. We've taken these indicators and applied them to the prognosis for 2024. The potential for a bubble burst is certainly there, but it's important to keep in mind that the real estate market, like any market, is susceptible to a myriad of influences. Government policies, economic conditions, even global events can all play a part in shaping the market's future. So, while we've analyzed the risk and the signs seem ominous, we must remember that predictions about the future are always shrouded in uncertainty. The importance of ongoing market analysis cannot be overstated. It's the only way to stay ahead of the curve, to anticipate changes, and to make informed decisions. Only time will tell if a bubble burst is on the horizon. Until then, stay informed, stay vigilant, and stay tuned.